training / trading room. I know we do a lot of, we try to highlight good trades, but the real purpose of the trading room is to get you proficient with your trading tools. So rely on someone like me to help you trade the market. All right, where's my daily chart? Here's my daily chart. Let's bring this over. Look what's been going on in the NASDAQ, and you can see we're very much in a dive here. The market very, very weak at the moment. Made our way back down here to the 7,000 zone. Here's dug in before. I don't know if they're going to be able to hold the market. We're opening with a bit of a downside gap. You can see where we're trading right now around the 70-50 zone, and the market leaves around 7,000. So there's actually a little 50-point gap right here. It doesn't look like this bar is including the over, but there is a little disconcerting. Is the market is kind of gapping on the way down. You see we have a little bit of a gap here between these two bars. That's known as an acceleration. So I don't know, have we seen the bottom? It's very likely here is going to be a pretty big number. You can see price before, they rallied here before. Are going to be able to take over and throw the market back into a sign, but I think we can expect a little bullish. Yesterday, you can see, was a big volume day as well, so that probably some buying in the background also. Here, if we take a look at the Eagle, we can see that overnight gap. As you can see from the wee hour, London open, the NASDAQ very, very strong. And now we're our opening. We're around that 70-50 zone. 70-50 a couple weeks back was also a pretty big number. A number that the market really liked. I remember we spent a lot of time bouncing around 70-50. All right, well, a couple of minutes into the session, we did have our first Eagle signal off the opening buzzer. Came right here, this hard edge bounce. So 70-55, oh, it did. It got up there. It found its high probability profit target and then promptly turned on its heels and came back down. So you could have made your profit within the first thing here this morning. Your day could be done. As I've mentioned before, you Raptor traders need not feel left out. You can take your first in-sync Raptor signal, although it wasn't quite as clean looking here on the Raptor, was it? Well, right now we're bouncing. That's not that unusual. Traders get a handle on which way to go. The Falcon producing, and that one also getting up to its some really good early opportunities here. The Hawk with the macro crossover signal right here, working out pretty. Now have a bearish turn. Try to get into that gap, back down to 7,000. That would be a month. We've got the number one signal here now on the chapter. We'll see if push back from here. If we get a couple of bullish, it's moved a little bit. There we go. We got a couple bullish bars. I look at shorting it below this low. Use this bar right here, or the series, my second push entry opportunity. Well, if they get much higher than this, we're kind of going to wash it out. Well, there we go. Back into the hard edge, but I don't know if I trust the sell. All right, that hard edge bounce. But you see how we're just kind of waffling. Ooh, I hate it when it's so flat. With a number two signal. Suite is bullish. Get a couple of bear bars here. There we go. Market pinched? Not quite. I don't like it very much when it keeps flip-flopping like this. Up for a few minutes, up for a few, down for a few. It's just kind of churning. Well, the trend is down, so I think what I'll do is I'll throw my just in case order to sell in. In case this was also a trading range and a retest, if the trend goes lower, if the market goes, it will have to, and I'll get my profit target. Okay, I better get a stop loss order there. It's a little tricky. The market's bouncing all over. Come on, let's take out that low. If we can take out this little swing low right here, that would void the double bottom and might actually establish a trend. Come on, there we go. Come on, you can do it. There, that's a little better. Okay, I'm going to get ready to roll my stops. If I can down here, say to a I'm going to start to roll my stops in. Not pause. Not at all. Come on, you can do it. All right, I'm going to squeeze the trade. That's it, to get that one bar. I'm not being too anxious. Oh, well, maybe small loss, but it may be more damaging, not the, to suck up the $70 loss, but rather if the market reversed and did continue lower without more cost. But right now it's probably a good call to bail. Couldn't quite even, but these aren't the trades that are going to your account. Testing the top end, this always makes me wonder if the go down, is it going to? Well, we've got a macro pullback working a 4-arrow consolidation here in the hawk. The eagle goes higher here, we're going to have a completed rule of 3 signal, so there is an opportunity here as well to try to buy it on the next buy signal, which should be somewhere above this high. I can see the warning dot starting to form. So maybe buy it around 70.48.5 or thereabouts. And all I'm doing here is I'm anticipating that maybe this will be a rule of 3. No, it will not. All right. I think I'm going to give them a few minutes here to get their bearings rather than around back and forth. Paul's asking, where did you get the 8-year? Okay, well, let's see which ATR indicator you're talking about. If you're referring to this ATR indicator, that is part of the Raptor and the Eagle. So if you email to Ben, he will hook you up with that, and I will email in here. If you are talking about this ATR on the trade calculator, well, the trade calculator is an add-on, and it's the Ninja 8 version of what the trade manager used to do for Ninja 7. It is not the trade manager. The trade manager was a strategy based. We had to actually hire a different programmer to the trade calculator. And DTS owner, you can get the trade calculator at a very discounted price. Okay, so we've got a rule of 3 going on here. I'm going to look to buy around that 70.49 zone. And once this order is placed, now I can explain what's going on here. Okay, so we've got something resembling a downtrend. We've been watching the market try to head lower, and we keep producing trend signals against a bearish band. We have had a test of the extreme, the all-important test of the extreme. That is what would be a rule of three signal in the eagle. And we will have comparable signals on the Raptor and the Falcon. And I'm going to take this opportunity. Halfways, normally I wait 75–80% of the way to the profit target, but I'm going to take the opportunity and roll to break even at this point. Our swing target, darn it, I should have taken it here on the Falcon or even the Raptor. This #1 signal, I would have hit my profit objective. We're not getting that much out of it. It seems like the moves are a little bit stymied. All right, I'm going to look at this #3 signal now. I'm going to treat this current bar as the second push, and I'm going to get my stop loss order out of the way. So when I say second push, all second push means is I've allowed the signal to engage. I see where the market reacts. Often will react shortly after producing the signal. And then I use that reaction bar as my new entry bar. And so, well, if we reach here, I'm going to void my signal. All right, I'm going to cancel that. The Bollinger Suite, way too bearish for me. When at this point, when it was still kind of hovering here around the hard edge, even though the Bollinger Suite was already bearish, I thought, okay, well, maybe it will recover because it tried to do a little recovery here, but no. Oh, taking a little bounce off of the, is that primary resistance? Yes, it is. Oh, here we come back with a counter trend, or not counter trend, but new short trend. All right, so we'll take it to the short side, and if in fact this dominant, so you can see we're in sync now with the Bollinger Suite. We produced the #1 signal, the cloud crossover. And once again, as we get about 3/4 of the way to the profit objective, I'm going to roll my stops to break even. Come on, get down there. Maybe I'll try to stretch this one out a little bit because this market does have the potential to try to get into that gap. Maybe try to cover about half of it. Okay, so we have hit our high probability. If I were smart, I would take profit here. Okay, I'm going to start creeping my stops. Okay, so these bars with these tails or these wicks to them, I'm going to roll above, and actually this one's hesitating, so I'm going to get my stops in tight. Hooray! Now, the reason I did bring my stops in a little bit more quickly is we hit not only our swing target, but also our trend. And I know from experience that very often the market will make some sort of reaction, especially after hitting the trend target. So, may have been too quick on the stop, but it was a decent trade all the same. I will take it. Thank you very much. So, in 3 trades already. One was a loss, one was a break even, and my third one was profit at my loss. It left me in the black, actually about 110, we'll say 100. My trading day should be done. If I have a 3 trade quota, I've made my 3 trades, I've hit my profit objective, and my trading day is done. So for those of you who haven't heard me harp on this every morning, you don't make more money trading by trading more often. You make more money trading by capitalizing correctly. So it's only $100 profit. It is $100 to trade it. I would have a $200, $300, 5 contracts, 5, 1,000, and that. Mark, I believe, well, he's not in the room today, but typically he's trading 4 to 6 contracts per trade, and he will trade only 3 times a day. What that does for you is it not only keeps you from blowing yourself up, but it makes you very particular trades you take. You don't feel rushed to take a trade. You can hold out for the best opportunities. And when you're starting wondering, okay, well, which are the best opportunities? Well, on the Raptor, we tried to highlight the better opportunities by introducing these signal prompts. But the signal prompts, and of course you can't take all of them because you can see not all of them will work out. If you keep trend in mind, so is the market moving sideways? It's trending, which way is it going? With trend, you will find very often you will do much better than if you trade against the trend. And if you have a little addition, I'm using the Bollinger Band suite down here to help keep me on the right side of the market. You can see like this number 3 signal that produced, yes, it would have been with trend, but it was actually against the Bollingers. So if I'm only looking to take 1, 2, or maybe 3, is to be, let's roll this over so we can pretend it's real time. Is this likely to be the best signal I'm going to get today? Really keen on, well, the trend is down. I think the market may try to get into that opening range gap. I really want to take that number 3 signal, but it's against the Bollinger Suite. So what can I do? Well, I can use the second push strategy. So I allow the signal to engage, I allow it to react. Typically, if it gives you a 2-bar reaction, if you use that reaction bar now as your signal bar, you will stay on the right side of the market. So if the market reverses at this point and picks up the new trend, chances are strong that you will at least hit high profit target. However, if the market is not ready to resume the trend, then by waiting for the 2-bar reaction, you'll usually keep yourself out of a potentially bad trade. Okay, so now here we are with the number one signal already. So here we are with a number one signal. Thing is in sync. One signal on our Bollingers. Did not see the market continue. Traders test and retest support and resistance areas. So if it doesn't want, there is a chance it's going to, and it's going to go higher to the next resistance point, which looks like it's going to be up here again around the 7.4 zone, that recent swing. Now look for major swings, right? You're not going to be so concerned with a swing like this, although if you are, you could choose to enter above that rather than right on the hash mark. Maybe wait for the Bollingers to come into sync or whatever you're going to use to qualify your signal that you're ready to risk money on it. And then the market goes up. Oh, look at that. The 70.54 area just breached it slightly, gave us that reaction. Regardless, we had enough in there to hit our. You're going to need to spend a little bit of time with your charts. You're going to need to grab your cursor down here and just roll it back and roll the bars forward bar by bar. And as you get signals, you're going to have to decide, okay, is this a signal I'm going to trade? How will I trade it? And then this way you're going to develop some proficiency with your charts. If you spent an extra 15 minutes a day with your charts, it really doesn't take that long to get comfortable. And that's where you want to be. You want to be able to look at the charts and say, even if you can't put your finger on it, something instinctively will say, one signal looks better to me than the other. This is journaling very helpful, and journal in particular. So much for writing down the trade parameters. You can use Trader View for that. It automatically records your entries and exits and profit and losses. But you're writing down the reasons for taking the, what do you that makes you want to take that trade? And I guarantee that within 2 weeks of journaling, that's all, you will begin to see patterns in your trading. Okay, here's another number one signal I think I want to try. So we'll take this, we'll kind of slide that below this reaction bar. Right, let's see. I didn't have a reaction. I hope that's bite me. My thought here is that maybe market is going to try to test that bottom end and do it quickly, I hope. Stops are, this is swing number one. This is where the stop should be. All right, turned a little early. That's good-ish. This low right here, that's key. Waited for the 2-bar reaction. This is down here. I would not be in, but it's a right. If I wait, then the signal actually hits it, and so this one not likely to work out for me. I think I'm going to get tapped here in a second. We just breached. Sellers not looking like they can pull it off. So this actually a good example. You don't want to, after you've made your, it, you know, you wipe out what profit you made just by dipping your toe in the pool one more time. We're supposed to be in trend mode, but the market's still hunting for a direction here, still trying to feel things out. It's a little conflicted. If I had to speculate, I would anticipate trying to fill the gap. I say that, and now we're going to produce a cloud crossover signal here on the Raptor. We're ready to signal back here on the. We're not moving all that hard edge, which is a little bit of a problem. And price-wise, you can see we're still at the 70-50 zone. We haven't made any progress here today. Just mini swings, higher and lower. All right, are they going to try that gap fill? Oh, they might. They might. We're here getting a possible trend change here on the Falcon. All right, there we go. Let's give this a. Where's my trend change? That I'm favoring the sellers a little bit here. Bollinger Sweep. Here comes my sell signal. There it is. And I'm going to try to fill this gap. So I'm going to order a little bit. 29, we'll take it down to 19. Okay, let's see what they got. It's not fully filling the gap, of course, but it would be about a partial fill, taking the trade down to 7,000 gap. Because I'm going to stretch this profit target, I'm trying to be more conservative with my stops as well. The better stop is right up here. If they can't here pretty quick, our trend line has just changed color. That's not what I want to see. Okay, I'm getting a feeling that I should not be swinging today. I should be just grabbing my profit as I have it. Okay, so when we swing below if we trade below this low right here, so if we can see like 70.28, then I can roll my stops above this high. A little problematic here at the moment. Come on, you get down there. And in fact, if we trade below, if we see 70.28, I'm going to roll my stops to break even. I'm not liking this flip-flopping, not one bit. Okay, I'm going to roll my stops right here, reduce the exposure somewhat. We should have seen here to the short side, the fact that the lows are holding, that's not good. That's not what I want to see. Just is that the market is sideways range. Come on. Here, I'll give them a ticks, only because it's not uncommon to see the market a swing high ticks only to pick up the trend again. David, I will get to your question here. And David's trading the mini Dow. Just looking for an opportunity to get this trade down here to a break-even point. Nope, not going to give it to me, scoundrels. All right, David's asking, what Renko bar settings would you suggest for trading the mini Dow? David, I would go with the defaults across the board. So if you're using the Mean Renko's version 2.0, you can adjust your brick size a little bit more precisely. So With the hawk, we go with a 6-tick brick. So I would go 6 by 6, 6 trend, 6 reversal, just the default. With the falcon, I would go again with the defaults, the 8 by 8. And with the eagle, once more with the default 12 by 12. Honestly, the only market that I veer away from the defaults on is the E-mini S&P. And that's, it seems because it trades at, you don't get enough flowing to actually produce a decent signal. And even that has an exception because we now have the mic. So here's the micro E-mini. And with the default settings, and you can see as far as the micro E-mini goes, we're not getting a whole lot of signals. Those came, but these are also the defaults. Also 8 by 8. What you need to do is feel free to experiment. When you change your settings, sometimes you have to adjust the clouds accordingly, as well as the hawk bricks. I'm referring, of course, to the Raptor now. And once you've made your changes, go through how do the signals respond. Remember, you don't necessarily want to introduce more signals, but you want to have confidence in the signals that you get. So let's say, for instance, you're only looking at your windows. Well, here's a number 3. Here's a number 1. That one worked out okay. Here were a couple of number 2 signals that worked out really well in hindsight. But here was an early number 1 signal. It did not print as a number 1, but I would have, the clouds were like 90% crossed. I would have certainly considered taking that one. So that worked out okay. And this is what you do. So you take a look at your signals that produce, and you can refine your brick sizes accordingly. But no, I go with the defaults pretty much across the board. Like I said, the only exception is the I got tagged on that reverse. A good example of why you want to trade with a trade quota. On those days when the market is trending really, okay, you may want to take one extra trade, but you know, when you look at your chart, and this is the morning session, we have one great big sideways trading range, don't we? So we tested the bottom end. Now it looks like we're going to test the top end. Oh, okay, we might actually be getting some traction now. A little bit of a pop through. So if that's the breakout, are we going to get a retest? Are we going to get at least one bear bar that I can look to buy above? So what I'm referring to is if this was the gigantic trading range that goes way back in the chart, We've just broken through the top end. I would like to see a reactionary bar at this point. Retest. Come on. Come on. They keep kissing it. And that would allow me to place a just in case order to buy, just in case the trend, this breakout, continues higher. Okay, there we go. 2 bars will make me feel more comfortable. There we go. Okay, so I know now if the market, if this breakout is going to hold, the market needs to take out that high. Pretty straightforward. In fact, I'll give it 1 extra tick. And what breakouts is the market actually begins to work itself into a bit of a bind. So if I get a couple of bullish on the eagle, I like the eagle because of the bigger bars for this type of strategy. You can do it on the after as well, but you need to get at least 2 bars, maybe even 3. Okay, so now I have 2 bars trying to resume the trend. If the trend does not continue, if the pull it off, well, then the market's going to go lower, isn't it? So it's just a basic market structure trade. Here we have our continuation signal, a couple of profit orders in play. There we go. And now the market has to decide. Like I said, it's a bit of a bind into a bit of a corner. Is it going to take out the highs and try to continue higher? Do the buyers truly have control? Or are the sellers going to knock them down again? And we will have comparable signals on the other tools. Yeah, see here on the RAT3 signal, I started this on the Eagle, so I'll finish it there. So we're filled to the long side. Let me cancel the alternate. Just cutting out. I apologize. GoToWebinar said that there's some sort of connection problem, which is out of my control. Now they've been so dodgy about running the trade out. I'm thinking maybe I should just take profit on my swing target. That would be 5 points. That would be 70.67 half. Oh, if I even get it. Quick turn on the heels there. Okay, the Bollinger Suite, very, very narrow, very, very sideways. This is what Bollinger traders refer to as a squeeze. It usually results in a move. They don't always know which way the move's going to go, but they like to think that it shows building momentum. Well, let's hope the momentum is bullish. Come on. Get up there. You stinkers. Oh, come on. One more bullish push and I'm going to get this trade to break even. All right. That's all I'm prepared to wait. We're hanging up here around 70.67. Okay, we did poke above it just briefly. All right, come on, get up there. You can do it. See, had I taken profit on target, I easily have my swing target, my swing profit. Oh, we did it. We did get through. Hooray! Well, it's about time. Well, you know, it kind of goes back to the market context. I was chasing my tail there, had me going back and forth in that breakout. Well, that was a decent little trade. If nothing else, if you did try those other trades, that would have helped offset those losses. But you can see how, so what trade is that? That would be trade number 6. You can see how trading more often does not make you more money. Wow, and some pretty decent follow through off that. Okay, so we're here at 70.75. Next stop, 7,100. Oh, we got our next resistance line at 71.13 quarter. 100 would intuitively be, what do they call that? Psychological resistance. While we trade, you can see we had the comparable signal here on number 3 signal. Even entertain these counter trend signals. If you do journal your trades, one thing you will find is when trades tend to cost you money. What's so interesting about counter trend trades is when they work big time. The market usually moves fast. You have no difficulty finding your profit objective. Well, and it looks like trend mode may finally have kicked in after spending the first 45 minutes waffling. It looks like now catching up with trade form, actually moving into trend mode. That's okay. I'm not disappointed. when the market has established a trend, there's really only two things you can do. You can either wait for anything resembling a pullback, or you buy in and run stop you can afford, because you're going to need it. Allow me to demonstrate. So we've got, here we'll go with the market order. We obviously have an uptrend. We're going to produce a follow-up signal now on the Raptor. I will wait for it to come into sync with the Bollingers, and then I will just buy the market. I will have to pull my stops way far back. It's just the way that it is. Bollinger should come tops next bar. There they are. So let's try to run this out. I'm going to eliminate that, and I'm going to pull my stops way down here. Now this is, and I could afford with my little account. But I just want to show you, in fact, it should probably be deeper still. And we'll take it down here, primary resistance zone. Once you have traction is out of the equation, this market higher. The problem is, well, it's been going higher for the last 25 minutes or so. It's not unreasonable to expect pullback of some sort. Problem is, you don't know how deep the pullback is going to be. Hence the top. The other method of getting into this trend is to actually wait for a pullback. And it's kind of ironic that where I got in was the high before the pullback. Not the first time that's happened to me, say. Most people aren't prepared to trade this way, though, just because the risk amount is huge. You know, you're risking 55 points. That's over 200 ticks. That's over $1,000. If you're trading a $10,000 account, this is a good way out. Now, when and if the market makes a new swing high, at this point, you can begin to roll your stops below the swing low. Which swing low is going to depend on where you do this trade. Let's see if they can poke got a good double top here and a wide band and a number 2 signal. If I were inclined to do a counter trend trade, I think a move back to the hard edge may be pending. Here comes that pullback. So now we've got definitely a double top of number 2 signals. Well, we don't have much else going on, so it's observe. I would never recommend you do a trade like this. Like I said, it's a good way to blow up a small trader's account. But for purposes. And you in sim, of course. We've seen this happen before. Market trends takes a little bit of a pause. The trend should resume. I'm not overly concerned about this trade. My stops are very, very deep, short of some catastrophe hitting the marketplace. It should continue higher. I hope. This is building into a two formation. This is interested in a reverse setups tend to be a little bit better. So you're looking first off for the band to get very. Then if we have a 2 signal followed by a 3 signal that's the 232, should head down here edge of the trading band. Okay, here come the buyer. If they can. Well, I'm waiting here. I was just taking a look to, the other charts we're setting up, and we're kind of the same. You can see where the band is starting to narrow. I guess I shouldn't have put this trade on. I could have. Not that we've had another really good opportunity, except this 232 signal. I could be nursing that here to the short side. I thought the trend would resume a little bit sooner, and I could actually show you how you can, once you have a trend, you can still make the trade work if your stop is deep enough, but they're spoiling my demonstration. I'll give it a few more minutes. There we go. We're down now to the hard edge. Hooray! I would probably anticipate it to dip a little bit here. Hard edge. That will get a few more buyers interested. I could see maybe even a move here to 70.70, less where the market picked up before, up around 70.65. And so we wait. Okay, so we're seeing a little bit of a reaction to the hard edge, which is what you would anticipate. If I wasn't already long, given the trend, given the reactionary move, I would probably a trend line up here and waiting for a number 3 signal to develop, or the clouds are out of sync, we're going to produce a new number 1 signal. But it's essentially going to be a hard edge bounce signal. It looks like the Bollingers will come into sync with that, and we may see the buyers try to recover the market. Okay, now here's our hard edge bounce signal. Remember though, is if we can breach the trend line, that will interest the sellers. The sellers will try to recover, breach the trend line. So it may be advisable to wait for a second push opportunity on this hard edge bounce signal. Look at that trend line out of the way so the prices can go up. Okay, so it looks like we wandered above the trend line at this point, so there could be a little bit of a bear reaction. Things really slowing. Activity, well, this no doubt the move of the day right here. And now we're kind of just in limbo. Okay, here we're coming down to that 70-65, 70-70 zone where it tried to pick up before. All right, it looks like we're back into the back and forth. We've actually sort of developed a bit of a descending channel. Like something like that. and we're likely to continue in this, develop into a broader trading range, which is not unusual after the market has made a big rally. So our trading range is likely to develop this. So we'll probably see the market get back up here, try to retest the top end. It may break out and get up to 71, get up here to 70. But that's what we got. We got ourselves a great big trading range. It's dried right up here. Okay. Actually, well, yeah, here's the number one signal. I was going to say this could be an early number one signal, but mark this now the proper number one signal. All right, here we go. We're testing the top end of the trading range. If we reach the top end, I can roll my stops up, but guess what? They get rolled to here, the last swing. This is why, you know, when you keep okay, here now in number three signal, still challenging the top end. Wow. Well, this is where patience is more than a virtue. You're trader. It wasn't quite the demo that I hoped for, but you can see how if you can run a deep enough stop, you can make almost any position profitable. All right, gang, I think we're going to tidy things up here for the morning. You're probably going to see the market continue in a little bit of a sideways fashion. There may be one more bull push. But other than that, I think it's going to continue to be locked sideways. We'll finish here with David's question. David says, hi, Eric. Since came back, got a new computer, loaded Ninja 7 and Raptor for Ninja 7. What's Ninja 8 other than David? I'm not sure even after the Ninja 7. The programmers say it makes more efficient use of the computer's resources. But I've mentioned before that if it was not for everybody always asking me, why are you still on Ninja 7? Why are you not using Ninja 8? I would be using Ninja 7. I found nothing wrong with Ninja 7. It was totally stable. The bit different, but whatever. It's graphics. It's not like it's Windows 98 graphics. Oh, no, I see absolutely no problem whatsoever using 7. All the software was designed for Ninja 7, so it all works seamlessly. I have had people say to me, I hate Ninja 7. Okay, I don't, because the only thing different between Ninja 7 and Ninja 8 is the graphical interface. Tried to make it prettier. Personally, I find Ninja 8 is a little bit steeper. Ninja 7, you used to click on a new indicator, it would at least give you a descriptive or some, the initials. Okay, if you don't know what C for, Ninja 8 doesn't show you anymore, doesn't give you a descriptive or anything of that. BOP, I have no idea what BOP stands for. So I think they've done themselves a bit of a disservice. You know, I'm not getting any younger. I find it difficult to read, the gray on black. But it's their sandbox. They get to do what they want. Unfortunately for us, when they built Ninja 8, they built it from the ground up, which means that they totally screwed up the trade manager. The trade manager is a system, and it will not work on Ninja 8. We have developed the trade calculator, which does almost everything the trade does, but not quite. So unless you have a good reason to change, and you don't mind Ninja 7, I would stay with Ninja 7. Yeah, Frank's not liking my my Ninja 7, but whatever. Hey, it's your money, it's your computer. Do what works best for you. Really, that's at the end of the day, that's all that matters. Yeah, David says, you know what cats do in sandboxes, right? Yes. But like I said, it's their platform, and you know, all the software has been adjusted to on Ninja 8. It was an ordeal. All right, gang. We'll close up shop here. Look for one more bull push, and then that's probably going to cap it for the buyers. I don't suspect the sellers are going to be able to force them. We're going to see back and forth, I believe, as the day goes on, especially now that we're kind of slipping into that lunch hour period. All right, I will talk to you tomorrow. We'll see you then. Bye.